Hey guys, John Paulamy here, Actionable Intelligence. Today is Sunday, August 2nd, 2020, and this is the weekly market update. So in this week's reality check, I'm not going to do a rant. This is an excerpt from an email I got, and I get a lot of emails like this or direct messages, and I wanted to take the time to respond to this because I'm doing it publicly. I'm not going to give the person's name, but I wanted to do it publicly because I think it would benefit other listeners. And before I get started, let me just say, I'm just a guy, right? I mean, you know me from these videos. Um, I think I'm trying to be as transparent as I can. You know, I'm not a guru. I don't know everything. All I'm trying to do is tell folks what I've learned in 20 or 30 years of investing, the mistakes I've made, because time really is your greatest asset. And if you go through all the steps or a couple or years of not learning the best way to do things, then you are going to waste time, and you cannot afford to waste time, especially in the era that I think we're entering. There's just not going to be a lot of room for error. If you don't get it right with the things I think that are going to happen, I mean, we're going to be entering a era where we're going to see transition of world leadership move from the west to the east. The wealth is going to move from the west to the east. The emergence of Asia. This is inevitable in my mind. So I think, there's a lot of things at work. There's a lot of things in the United States. The United States has a tremendous amount of problems. It's, in my view, I've said this before, and I don't mean to say these things to be provocative or push people's buttons. I don't see the United States in its current political state in a generation. It won't exist as a political entity that it exists today, in my view. Just too many issues. Forget about even all the political issues, the differences of opinion, the extremes of the left and right, the lack of a center. I mean, there's no cohesive value system that holds the country together. What is the value system of the United States of America? That differs depending on who you talk to. And not to mention the financial problems that this country has that are just not being acknowledged. I mean, there was an excellent interview by Jim Paplava on the Financial News Network. I listened to it. I subscribe. They do a lot of great interviews. I think most of the good stuff's behind the paywall, but it's only like $100 a year. And he interviewed Lawrence Kotlikoff. He's a professor, and this guy's big specialty is the impending time bomb of the unfunded Medicare and Social Security liabilities of this country. And not only that, state pension funds. I mean, it's just a big mess, and no one's addressing that. We're talking about, Confederate statues, and stuff like that. It's just people worry about the wrong things. So I guess what I'm saying is that you really have to get your shit together. And you cannot wed yourself to the idea that yesterday is going to be, or today is going to be the same as yesterday. Things are going to rapidly change. And if you're not unbridling yourself of various biases, then you are going to have a fog over your eyes and you are going to not do well. So let me read this excerpt from this email, and then I'll address what this guy said from my perspective. And like I said, I'm just a guy on the internet. I think I read somewhere that there's several million podcasts now. Everybody, it's been lockdowns, making videos and making podcasts. And I think maybe that's a good thing, but maybe it's a bad thing. But, I've cultivated a pretty good audience here. And I think some people think that I have something to say. So this person reached out, and I'm going to try to answer this as best I can. The reason I'm writing is that I went to your website following listening to your interview. That was the interview I did on miningstockseducation.com or something like that, I believe it was. I see you have a newsletter subscription. While that's great, what I really want is to learn how to find alpha myself. I read a couple of your articles, and you talk about the hard work and time it takes. I guess I was hoping to learn how to fish rather than being given a fish. Obviously, guys with Ivy League finance degrees also want to beat the market. But I just want to have some confidence in my investment thesis, even if contrarian, other than I heard it from so-and-so. So my question is, where does someone really interested in the mining and resource space get some investing education so that I can get to a place like you, more than a mere chaser? Where do I start? So, I mean, I've kind of touched on this before in another video about my investment thesis. And I'm just going to talk about it in general, not specific to resource stocks. One of the reasons I'm invested or speculating in resource stocks is because I believe that they are very cheap relative to the rest of the market. And I believe that they have asymmetric possibilities of moving higher. And I believe that they are an inflection point based on supply-demand fundamentals of certain resource areas, and also the monetary malfeasance that's being executed by the federal government in this country, various governments around the world, and of course all central banks that operate on a fiat currency regime. So what I would say is this: the main thing that I've learned is a couple things that I think are very important and take a tremendous amount of work and self-introspection. Most people are not good at self-introspection. They cannot look in the mirror and self-analyze themselves. What are my weaknesses? What are my strengths? Do I have the stomach for this? How much risk and volatility can I withstand? Am I suited for this? Will I put the time in? Am I even interested in this? You know, why most people are not successful with investing their own money that they worked very hard for. I mean, I meet many people that are top notch in their field. They're surgeons, they're attorneys, they're engineers, they run a business, and they're top notch. But then they go and try to invest the money, and some of these people make tremendous amounts of money in their selected craft. They're geniuses in their craft, but outside their circle of competence, they stink. It's not transferable because you're a good carpenter that necessarily says that you're going to be a good, investor, or that you graduated from Harvard Law School and you're part of a top law firm doesn't mean you're going to be able to, look at a balance sheet or understand the dynamics, supply-demand dynamics of the uranium market, or if you're even interested. So that's why a lot of people are looking for tips. So what I say is this: first of all, success leaves clues, okay? Find out who the best investors are in history. I've named some of them before. It's not just recent ones like Howard Marks and Warren Buffett. There's been top investors. One of my favorites, Walter Schloss. There's a Walter Schloss archive on the internet. His articles. He's a very humble man. He was very successful. He didn't seek out a lot of notoriety. There's a lot of top investors, even earlier than that. And they have a common theme, okay? They buy things when they're cheap. I think it was Howard Marks, or maybe it was Soros, but basically, or maybe it was Druckenmiller, one of these guys. Anyways, basically they asked him a question about this. They said, well, you're basically, your returns are going to be kind of cemented in based on what you pay for a security. And, you're looking to buy things cheap or undervalued, okay? Relative, I always try to say this, you're trying to buy $1 for, less than $1. And then something that's at an inflection point so that the market, just because it's worth $1, you think it's worth $1, but the market currently doesn't view it that way, doesn't mean the market's going to view it that way. But historically, what we can see is that usually does happen. That's why Buffett has that saying where he says in the short term, the market's a voting machine. It's very arbitrary and capricious. You can see that even today with a lot of what's going on in our stock market with some of these goofy things that happen, like Kodak going up thousands of percent, or these bankrupt Hertz and stuff like that, Robinhood. I mean, these people are just gamblers. They don't know what they're doing. Vice, in the long term, it's a weighing machine, okay? In the end, value outs. In the end, assets that are cheap will be fully valued. So that's the first thing, You want to be looking at things that are cheap. Things, if you want to be a contrarian, you have to look for things that are out of favor. And just because something's out of favor and cheap, it's there for a reason. There's a reason why uranium stocks are down 80 or 90% over the last 10 years, because the price of uranium crashed. Now being able to do the research, being, what you're trying to do is obtain an information advantage that no one else, that the majority of the market doesn't have. And so that you can say, you get this aha moment. And you say to yourself, okay, this is a when event, not an if event. This has to happen at some point, or something else is going to happen. I mean, Rick Rule says this when he's talking about uranium. I mean, I hate to use these cliches, but like I said, breadcrumbs, success leaves clues. If the price of uranium doesn't go up sufficiently, then the lights will go out. I mean, that's not a provocative statement. That's actually true. They'll keep winnowing down. If the price stays where it's at, people are not going to come in and invest in new mines, and it's a depleting resource. Okay, so if you're going to be investing in the resource markets or speculating, you should be looking for sectors in the resource market where the cost of production is higher than the current price of that particular commodity. That's the case with uranium, for example. That's the case with several commodities right now. So it's selling for, some of these things are selling for cheaper than it costs to mine them in sufficient quantities to supply the market. So you have basically an industry like uranium that's in liquidation. Inventory is being drawn down, mines are being depleted, and no new capital is coming in because there's no incentive price to incent someone to take the risk and invest the money and go through the bullshit to create more mines. I'm just using that as an example. So that's number one. The other thing that you have to do, I mean, that's the easy part, though. That's not hard to figure out. I mean, looking around, okay, I made a video with Scott Osheroff the other day, okay? And we just used one example. The guy spent his entire time in Asia, in these frontier markets in Asia. They're extremely cheap. But there's not one person probably listening to that video that will even look into investing in those places because it's too hard. But that's where the value is. That's where the growth is. That's where the positive demographics are. But people won't even pick it up. I've talked time and time again, one of the ways that I make money is with the CAPE ratio. I look for blown out countries, okay, wait for an inflection point, and then buy them and then, ride them back up as the thing goes from terrible to less bad. Most people don't do that. Okay, so most people do want a Greyhound track tip sheet. They just want somebody to tell them, or they want affirmation. They want somebody to tell them. They seek out information, confirmation, and affirmation from somebody on the internet that they don't even know, or anybody, their neighbor, whoever. I have this view in my head about Tesla, and it's going to keep going up. And I want to go find the people on the internet that agree with me, and then I can have affirmation and confirmation. I can feel good about it. Okay. They're not doing discounted cash flow analysis or thinking about long-term returns or how they're going to get their money back. It's just, the stock goes up, so they buy it. That's gambling. That's speculating. That's fine, but there's not a lot of long-term successful, wealthy speculators and gamblers. You have to do a certain amount of investing. You have to buy things cheap. Now, the main thing, if you ask me, the most important thing that you need to do, which is very difficult and why most people are not successful, is you have to know a lot. You have to take in a lot of information. That's how you're going to get an advantage over other people. You're going to have to spend a lot of time, you should read as much as you can about geology. You should listen to lectures. You should read about it. You should take in information. And as Munger says, you create this lattice work of knowledge of various things, okay, metallurgy, chemistry, mining. And then these things start to overlap and you create this lattice work. And then these aha moments happen. These ideas will then come to you. Okay? And that's a lot of work. That's what Charlie Munger says. As kids make fun of him that he's just a book with legs that walks around. And he said that's what him and Warren do all day. They basically spend 8 to 10 hours a day reading things. Are you going to do that? That's what it takes to be successful. You have to read. You have to take in information. Even things that you don't agree with. You have to try to poke holes into your thesis. You can't be out there looking for affirmation or confirmation from other people. The other thing that you need to do, in my view, is that you need to learn about critical thinking. And there's some, books about that. There's some ideas about that. And you have to be a critical thinker. You have to examine, everything from every angle, and you have to purge yourself of biases. And regardless of what the woke crowd says or any of these people that are so high and mighty, everybody has biases of some type. Okay? And you have to purge them. Like I've said before, I've talked about this before. There are a lot of people I know that during the stock market crash back in 2008, when the Fed was pouring the liquidity on, and I think the S&P made a bottom at 666. There's many people that wouldn't get back into the market, even though liquidity and sentiment is what typically mostly drives these markets, because they didn't like Barack Obama and his policies. What's he got to do with it? It had nothing to do with it. The Federal Reserve was adding tremendous amounts of liquidity. So that's an example of a bias, right? So that's another thing you have to do, and that takes a lot of work. And some people can't do it. Most people can't do it. Look at how people react. If you're on Twitter or any social media, so just politically, that's a perfect example. They always cautioned me when I was growing up, don't talk about politics or religion. Why? You should be able, if you're an adult, talk to another adult, and you can say, well, I don't agree with you. There's been many times when I haven't agreed with someone on something originally, then I step back and I didn't scream at them and start foaming at the mouth, threaten to kill them or hit them, or throw, frozen water bottle at them, or bricks or whatever, or burn down a courthouse over it. I went back and thought about it and said, this person has a point here or there, and I've changed my views on some things. But most people can't do that, right? So that's another thing you have to be able to do. And those are the hard things. Those are the things, but that's what people want to hear, right? They just want, well, here's what you need to do, A, B, C, and D, touch these bases, and, you'll be wealthy. The other thing is consistency. You have to be consistent. It takes time. If you're chasing the lure of rapid wealth, look at the best investors of the world. Look at Buffett, look at Prem Watsa. A lot of people list their returns. They're not, making hundreds of % a year. So if you think that's going to happen, and you're competing with the world's best investors, they're averaging 20% a year all through the ups and downs through decades. Okay? And the way that you get the better returns is, like I said, you don't buy overvalued markets or overvalued securities. You have to find undervalued things. And what I don't understand for most people, and the advice I would give somebody that's younger, is why are you having home country bias? The world is your oyster with the internet. Even on my interview series, I've talked to people all over the world, perfect clarity. We're interacting, boots on the ground, I'm getting the information. You can get on a plane, well, you will be able to eventually again, get on a plane and go to these places and, open a brokerage account. A lot of times you can just open it online, but people won't do the work. Well, you don't want to buy a market at 3 times earnings with a dividend yield of double digits. That's how you make money in the long term. So, people, if you're asking me, how to fish, find out, make a list of all the top investors throughout history. Seek out their biographies, seek out their writings. People like Howard Marks and Buffett and Munger, Druckenmiller, all these people are interviewed all the time. That doesn't mean they're right all the time either, but you're going to start finding commonalities between them. Okay? You're going to start seeing the common behavioral traits that led them to be successful. It's buying things for cheap. Valuations are very important. And I think really is emotional control. Do you have the emotional quotient? We talk about an intelligent quotient, IQ, but an emotional quotient. Most people don't have that. They can't control their emotions. They have biases that they cannot purge that will not allow them to do certain things. I've told the story many times, People, I won't invest in that because of the XYZ. Okay, well, that's your prerogative. And, that's an example. So I don't know how to really make it any more plain. There's no magic elixir. It's a lot of work. It's a lot of effort. And it takes time. You can't rush it. And you have to trial and error. Another thing I've encouraged people to do, which most people don't do, I'll ask them, write down your plan, because everybody's plan and journey is going to be different. My risk profile, the amount of risk that I'm willing to take, my knowledge base, your knowledge base, everybody's is going to differ. You should write down why you get involved in a particular security or why you took a certain position. I'm in uranium because why? The supply-demand fundamentals are skewed in my favor. My expectation is that this is going to happen over the next whatever, however you write it. It can be, a 50-page term paper. It can be a couple paragraphs. And you should revisit it. Is this still making sense? I have no shame in saying that I had to get out of the offshore oil market. It went against me. And you just say, hey, you had to fold it up and go away because it just, and now you see all the companies are going through bankruptcy. Now, at some point, I think they emerge and become an outstanding speculation down the road. But, hey, nobody's going to be right 100% of the time. You have to know when to say you were wrong and then analyze why you were wrong. And then hopefully on the next deal, you build up that knowledge base, that wisdom. But I didn't get mad about it. I didn't get all sad about it. I didn't throw things against the wall and blame somebody else. It is what it is. It's part of the game. I've said this before. I mean, if you're a true contrarian that's investing and speculating in asymmetric opportunities, I mean, you can be wrong more than half the time, as long as you do proper position sizing and you do loss control. And manage your money correctly. I mean, you can be right less than half the time and still make a tremendous amount of money. The difference between a 300 hitter in baseball and a 275 hitter is probably about $5 or $10 million a year in salary. So it's like Pete Rose said. I was watching a video of him the other day. What other business, like in baseball, for example, can you not be wrong 70% of the time, only be right 30% of the time? That's get a hit and still make it to the Hall of Fame. And it's kind of the same thing in investing. As long as you are buying cheap, as long as the valuations, okay, as long as you understand position sizing and risk control. And I can't teach you that in a video. It's not my job to do that. I can't do that. There's a tremendous amount of information out there, and you're just going to have to wade through it, and you're just going to have to sift through it, and you're just going to have to see what's worked. And that's why I say success leaves clues. You don't have to invent it yourself. You're not that smart. You don't have enough time to do it. Find out who the successful people are, and then find out what they do. And like I said, write it down. Start doing comparison. Wow, it's kind of the same thing. Valuation's a big deal. Having emotional control is a big deal. Being able to withstand volatility is a big deal. So that's all I have to say about that. I hope that was helpful. I don't know if it is. I mean, that's just my view on it. It's going to be a longer video today, but let's get into some of the news for this week. Looks like MMT is going to march on. We're going to have another stimulus. This is just some of the things that I'm seeing being proposed in this next stimulus. Another round of $1,200 stimulus checks. Your little crumbs as Wall Street gets bailed out again and gets access to billions and hundreds of billions of dollars. Gets to front run the Fed on corporate bond purchases and I'm sure eventual stock purchases. But it is what it is. Enhanced unemployment benefits capped at 70% of wage. I actually agree with this because what's happening is you're incentivizing people to sit on their ass and not go back to work. We're already seeing that, when businesses do open up, people don't want to come back to work because they're getting more free money from the government than they were making before. So, Munger says, show me the incentives and I'll tell you the outcome. So I'm actually in favor of this. Of course, the Democrats aren't because they like giving people free money. It's, more popular with the hoi polloi. But he wants to sit around, drink Schlitz, and play, Call of Duty on PS4 or whatever they're doing. $105 billion in education funding to open schools. I don't know what this is for. I mean, most of your property taxes you're paying go to the school districts. That what do they need? $105 billion so that the teachers unions can funnel off more money to the Democratic Party? I mean, seriously? student loan relief that pauses student loan payments for borrowers, an extension of the payment protection program, that's, paying businesses to pay their employees so when they eventually turn the economy back on. Again, I mean, it all comes back to where's the money coming from? They don't have any money. The government's not a cornucopia. Okay? They're not, the tax base is collapsing. There's no money. They're just printing it out of their Treasury's issuing securities, the Fed's buying them, and they're just giving the money out. It's just not sustainable long term, and we are going to pay a severe penalty for this. I mean, it all feels good. These inflations feel good at first, but the mindset is going to change on this. When you get into an inflationary mindset, and people start realizing what's going on, that's why you're seeing what you're seeing in the markets. That's why you're seeing gold and silver make new highs. That's why you're seeing Bitcoin and Ethereum break out this week. People that have cash, that have negative yields in bank accounts, are realizing these people are not stopping for nothing. They are going to devalue this currency. They are going to issue a tremendous trillions and trillions and trillions of new currency units. So any existing currency units are going to lose value. They are going to lose purchasing power. So people want to buy things that cannot be increased massively by the government, by fiat. I mean, I get a little pushback because I made a video, I think it was a week ago, that I thought gold was overbought. I sold my Caledonia mining. I made a video about that yesterday, why I did. Look, guys, nothing goes straight up. Stuff gets, even in a bull market, things get overvalued temporarily. Caledonia Mining, for example, went up 48% in 1 week. I've owned that stock for several years. My cost basis is very cheap. The company isn't based in Zimbabwe. There's a lot of issues there. When I'm up several %, it's time to take some money off the table. If you don't do, and there's other opportunities, like I pointed out in that video, with natural gas and some other things. So, I'm looking for, I'm not a gold bug or a cult member. Yes, gold's gone up. I was on the gold train long before most people that were coming to my videos commenting thought gold was going to go up. As a matter of fact, I had to endure a lot of poo-pooing and ankle biters telling me that I was nuts. Gold and all commodities will do well in an inflationary environment I am envisioning. We are transitioning from a deflationary, disinflation environment to inflation. Gold will do well. Commodities will do well. However, historically, energy and copper perform better than gold in an inflationary environment or in previous inflationary episodes. But everybody's wedded to the gold. I mean, what it is people chasing, like walleye, chasing a lure around, the shiny object. When everybody is coming on CNBC, when everybody's on the internet, when everybody's making videos about something, it might be time to take some money off the table. It might be a short-term top involved. Now, one of the reasons I like gold stocks, still people are saying, well, you got to buy gold. That's what the gold bugs will say. Gold, you got to hold gold. Well, I'm here to make money. And I go to HEB to buy groceries. They don't take gold. They take dollar bills. Okay, so the gold stocks, are minting money right now. All-in sustaining costs are $1,100 an ounce. Their oil cost is relatively low. That's their main energy source for a lot of these companies is diesel. And they're gushing cash flows. So, and the gold stocks are lagging the physical price of gold. So the expectation I have is that the gold stocks are going to play catch up. I still own bullion. It's a savings. With negative interest rates in banks and on treasuries, gold now has a positive carry. But it's not going to go up 200. I don't know how far it will go, but I think you have other areas where you can get more leverage. Let's put it that way. And gold stocks are one of those. You got to remember something, guys. Nothing, even gold, goes straight up. There are going to be periods where there's pullbacks and consolidations in the price during this bull market, which I think will go on for years. And there will also be some gut check moments where it's going to try to buck people off. It's going to get big drawdowns, and people are going to think, well, this is the end of it, when it won't be the end. You just need to be aware of this. You just need to look at any chart, long-term chart of anything that's been in an uptrend. Amazon, okay? Previous gold markets. I mean, this is just intrinsic to any market, but people forget it. Again, they're wedded to a bias. They have visions of sugar plums. It's not how markets work. Well, another one bit the dust. Noble Corp, an offshore drilling contractor, filed for bankruptcy with a plan to cut more than $3.4 billion in debt. They just filed for bankruptcy, I think Friday. Eliminate all the company's bond borrowings by swapping debt for equity. Note holders agreed to invest $200 million of new capital through second liens, and Noble has lined up a $675 million revolving credit-backed facility with J.P. Morgan. What I'm hoping is going to happen with the offshore market, this is, I think, the second or third now bankruptcy we've seen in the offshore drilling market, is that we get rid of a lot of the marginal and older rigs so that when we eventually emerge from this bear market in oil stocks, that the supply of rigs will be constricted, but the demand will be very high for the survivors. And, we'll just have to see how it plays out. But I just wanted to point that out because this is kind of going down the path that we anticipated, right? More and more of these companies going bankrupt. That doesn't mean they disappear. They just restructure, right? And the ownership changes from the equity holders to the bond holders. I've seen this happen many times. Made a lot of money with companies coming out of bankruptcy 2 or 3 years down the line after the new equity is issued, and the industry eventually returns to some level of activity and profitability. And last but not least, there's Eric Nuttall, one of my favorite oil guys, one of the last of the Mohicans. I think he is the last energy fund in Canada, Ninepoint Partners. He had a recent letter out on oil. Just a few points from the letter. I'll put a link to it in the show notes. U.S. shale hyper growth is over. I mean, he's making the case in this letter for a return to higher oil prices next year into 22, which I don't disagree with. But he's saying, U.S. shale hypergrowth is over, which we've been talking about, and I agree with. This era of just people throwing money at these people just to drill is pretty much over. Excuse me. Global offshore production, which is about 1 in 4 barrels produced today, is entering a period of stagnation decline due to too many years of insufficient investment. That's exactly true. OPEC spare capacity, adjusted for currently constrained production that will come online over the next 6 months as production continues to normalize, sits at around 2 million barrels a day at best, and resides in a country, that country being Saudi Arabia, with meaningfully higher oil price desires, hence their unwillingness to bring on production anywhere near current price levels. So I think, the voluntary cutbacks were scheduled to stop yesterday, which was August 1st, but I think there's going to be a hesitancy on OPEC's part to just flood the market with oil at $40 a barrel. But that's what a lot of people are predicting, a lot of market participants. But the Saudis don't want to sell their oil for $40. So I don't know. We'll see what happens. But, I think eventually the economies of the world have to open up, and there's indications. If you look at the amount of flights and the amount of activity, traffic. I mean, Ninepoint Partners does a lot. They show a lot of anecdotal things about this traffic returning. I mean, oil demand is creeping back up to it's not back to its old highs yet, or the normalcy of 100 million barrels a day that was before coronavirus hit, but we're getting there. And these economies are eventually going to have to open back up, right? We're just not going to stay like this. I think the past due date on this is going to be the election in the U.S., right? People have had enough of this, and regardless of the Democrats win this thing, people realize they got to open up the economies again. So I think that's going to happen. Oil demand will continue to grow for at least the next decade, despite continued electric car adoption and expansion of supposed green energy capacity due to population growth rates and an aggregate increase in net living standards. That's right. Very high correlation of GDP and per capita GDP with energy consumption. That's what enables GDP growth. So, hydrocarbons are used for a reason because they're easy to use, relatively cheap, relatively easy to transport. They have all these advantages. That's why we use them. So I expect that to continue on a long-term trend. So this is a pretty good letter. I would take a look at it. Have we been wrong? Yeah, we've been wrong. I mean, 18, 19, and 20. I mean, there's circumstances of why we were wrong. Got the Trump double clutch, got the Saudi-Russian deal, got coronavirus. I mean, but these are all kind of going to cause, these low prices that we've been afflicted with for several years, are just exacerbated the lack of investment that's going to lead to I think, a higher prices over the next few years. And then you take the additional wind in our sails, which is going to be the debasement of world currencies. Everybody's debasing their currency. That's not going to be good for commodity prices. I mean, it will be good for commodity prices going higher. It won't be good for most people that don't know what the hell's going on, and they'll be out there crabbing about wanting price controls and all this other crap because they don't have a clue what's going on. So, but, it's not my job to educate the world. My job is to put food on the table and take care of mine. And that's why I'm a speculator and why I invest. I hope that's why you're doing it too. I'm not trying to make a point here. And I think that kind of goes back to the original discussion at the start of this video. I think that's another thing to remember. If you want to make a point, you should staple a piece of cardboard to a stick and march around, or I don't know, go to Portland and spray paint the federal building if that's what you're into. But I'm here to, I got to put food on a table and take care of people. So that's it. All right, guys, that's it for this week. Appreciate the support. Actionable Intelligence newsletter is available. It's out there. I've raised the price to $150 a year. Hey, inflation is rampant everywhere, even in the newsletter. So if you are interested, you can click on the link in the comments. I put links in the comments or in the show notes, and you can take a look at that. Certainly think things are turning around in the portfolio. All right, guys. Appreciate your support. We'll talk to you next week.